Hey everyone, and welcome back for another deep dive.
Yeah.
You know how it was after the 2024 election?
Yeah.
It felt like everyone was so optimistic,
Oh, yeah.
and we were just like riding this rocket ship straight to the moon.
Yeah.
Well,
It.
things are starting to like level out a bit, and this deep dive is all about understanding why that is.
Yeah. It seems like we went from like irrational exuberance
Mm-hmm.
straight into like this show me the money attitude.
Exactly, and that's
Well-
what we're seeing. This is what's called an investor sentiment reset,
Yes.
which we're going to dig into today and figure out what that even means
Yeah.
for you and for your portfolio.
Yeah.
Yeah.
So investor sentiment is kind of like
Yeah.
the mood of the market.
Mm-hmm.
And when everybody's feeling good, prices tend to go up. But when people get nervous, things can start to head the other way.
And right now we're seeing this shift
Yeah.
from all that crazy optimism
Right.
to something a bit more, I don't know, cautious?
Cautious. Yeah.
Okay.
Yeah. A little bit more hesitant. Remember right after the election, we saw those record highs?
Oh, yeah.
The S&P 500, it was just
It was crazy.
soaring, but now it's kind of...
It's taking a break,
Yeah.
like a runner catching their breath.
Exactly.
Yeah.
It's been a really long sprint.
And it's not just the S&P 500 either.
Right.
Our sources are showing that the Russell 2000,
Mm-hmm.
which tracks smaller companies,
Yes.
is feeling it even more.
Yeah.
And some are even trading below pre-election levels.
And that's because smaller companies are, often seen as riskier. So when investors get nervous, they tend to pull back from those first.
Right, that makes sense.
Yeah.
So we're seeing this shift,
Yes.
but what's causing it?
One of the biggest factors that's coming up in a lot of our research is inflation.
Oh, inflation.
I know it's been
The buzzword
word on everyone's lips.
for months, but it's actually starting to cool down.
Really? So all that talk about runaway prices, maybe it was overblown.
I don't know if I'd say overblown, but the data is showing that it's starting to ease up.
Even core inflation, which strips out things like food and energy prices, even that's coming in lower than expected.
So that's got to be good news for investors, right?
Yeah, absolutely. Cooling inflation means that the Fed, the folks who control interest rates, have a little bit more breathing room.
Yeah, speaking of the Fed, didn't they kind of
They did.
throw everybody for a loop back in December?
They did. Remember how initially they were hinting at maybe 4 interest rate cuts?
Yeah.
Well, they walked that back
Oh, yeah.
to just 2.
Wow.
So fewer rate cuts means the Fed thinks the economy is strong enough to handle things
Okay.
without as much intervention from them.
So it's kind of a good sign?
This is actually a sign of confidence
Okay.
in the long-term outlook.
Okay, I see. So
Yeah.
it's a good thing. But fewer rate cuts also mean
Right,
that
right.
borrowing gets more expensive,
That's true. It does.
which can slow things down. It's kind of like
It's a push and pull.
a push and pull.
You got to find that sweet spot. Keep inflation in check without completely slamming on the brakes of economic growth.
Right. So the Fed's moves might seem a bit confusing,
Yeah.
but they're really just trying to steer the economy in the right direction.
Exactly. And remember, markets are forward-looking. They're not just reacting to what's happening now, but
Right.
what they expect to happen down the road.
That's true. But if history has taught us anything, it's that markets rarely move in a straight line.
That is very true. Remember what happened after the 2016 election?
Oh, yeah.
We saw a similar rally followed by a period of
A little bit of a...
consolidation.
Everyone was talking about the Trump bump,
Yes.
and then things kind of settled.
Exactly.
Yeah.
And if we look even further back, we see the same pattern over and over again. The dot-com boom and bust, the housing bubble. Markets just tend to overreact on both sides.
So what you're saying is this reset that we're seeing now
Yeah.
might actually be a good thing.
I think it's a healthy correction, a chance for the market to catch its breath.
Okay, that makes me feel a little bit better.
Yeah.
But before we get too comfortable here,
Yeah.
what should investors be watching for in this new landscape?
Well, there are a few key things. First, those macroeconomic trends. How's the overall economy doing?
Right. By that you mean like
GDP growth, the job market, things like that.
so basically, are things good?
Yeah. Is the economy actually strong? Because a strong economy usually means a strong market.
Right.
But even though some things look pretty good on the surface, there are a few underlying trends that are making some people nervous.
Intriguing.
Yeah.
You've definitely got my attention.
Yeah.
Okay, so we're talking about those macroeconomic trends.
Right.
That can give us a better picture of where the market's heading.
Exactly.
So can you remind me again?
Yeah.
What exactly should we be paying attention to?
Well, one thing that's really interesting right now is that global events seem to be playing a bigger role
Okay.
than they used to. For example, there's some political instability
Yeah.
in certain regions, and that's making investors a little nervous.
So it's not just what's happening here
Right.
in the U.S.
Exactly.
It's what's happening all over the world
Yeah.
that could affect things.
It can all have a ripple effect.
Okay.
And speaking of ripple effects, remember all those supply chain issues we were having?
Oh, yeah, that was rough.
It was like you couldn't get a car
You couldn't get anything.
or a washing machine.
Yeah.
Well,
I remember that.
those problems haven't completely gone away.
Oh, really?
Yeah.
I thought those were over.
A lot of experts are saying that they could actually come back
Wow.
because of the geopolitical stuff that's going on and because the demand for certain raw materials is increasing.
So even if inflation's cooling down here,
Right.
these supply chain problems
Yeah.
could mean that prices go up
Exactly.
in other areas.
They could have these little mini price spikes in different sectors.
And then that makes investors nervous.
And then everybody gets nervous again.
Right, like a domino effect.
It is a domino effect. And that's why it's so important to look beyond just the headlines and dig into the data.
Because what looks like good news
Right.
could actually
Be
be
a bunch of risks
risky. Yeah.
hiding underneath.
Okay. And that brings us to interest rates,
Oh, yeah.
which we were talking about before, and how the
Yeah.
Fed
Right.
might cut those less than we all expected.
Exactly. And that could mean that borrowing gets more expensive.
Right.
And that's not just for big companies.
Okay.
That also affects everyday people.
Oh, interesting. So, like how?
Well, let's say you're thinking about buying a house or car.
Mm-hmm.
Those higher interest rates mean you're going to be paying more
Oh, yeah.
in interest over the life of the loan.
I see. So that could make people...
Yeah, it could make people think twice
Yeah.
about making those big purchases.
So then consumer spending slows down.
Yeah,
And then that affects the whole market.
the whole economy.
Yeah. Okay. Wow. So we've got global events, supply chain issues, and rising interest rates.
It's a lot.
All kind of putting a damper on things.
Yeah,
But are there any bright spots?
there are.
Okay, good.
One area that's actually looking really good is
Okay.
new technologies.
Like what?
Like artificial intelligence, renewable energy,
Okay.
even space exploration. These are sectors that are seeing huge growth.
So even though the market overall might be resetting,
Right.
there are these little pockets of opportunity.
Absolutely. It's all about finding those companies that are going to do well.
Okay. That makes sense. So how do we know which ones to watch?
There are a few things you want to look at
Okay.
when you're researching. First, look at their financials.
Oh,
Their
yeah.
revenue growth. Are they actually making money? Things like that.
So basically we need to make sure they're financially sound.
You got it.
Got a good track record.
Yeah, but it's not just about the numbers, though.
Okay.
You also want to look at the management team.
Okay.
Are they experienced? Do they have a vision for the future?
That makes sense because a company can't succeed
Right.
without good leadership.
Exactly. And then finally, look at their competition.
Okay.
What are other companies doing? Are they in a good position
Yeah.
to compete?
Okay. It's like a whole investigation.
Yeah, you got to look at all the clues.
Yeah.
And remember, investing is all about managing risk.
Right.
There are no guarantees,
Right.
but if you do your homework, you can make smarter decisions.
Right. Okay. So that's super helpful.
Yeah.
But before we jump into any specific strategies,
Right.
we need to talk about market breadth,
Yes,
which we touched on earlier.
we did.
Can you remind me?
Yeah.
What is that again?
Market breadth is basically a measure of how many stocks are participating
Okay.
in a particular market move.
And why is that important?
It can tell us how strong a rally actually is. So if the gains are really broad, meaning a lot of companies are going up, that's a really good sign.
So a rising tide lifts all boats.
Exactly. But if it's narrow, meaning only a few stocks are going up,
No.
that could be a sign of weakness.
Okay, that makes sense. So how do we measure this?
Well, there are a lot of indicators we can look at, but one of the most common ones is the advanced decline line.
Okay.
It's pretty simple. It just tracks the number of stocks that are going up
Right.
versus the number that are going down.
So if it's going up, that means things are good.
Exactly. But if
Okay.
it's going down, even if the market overall is going up,
Uh-oh.
that can be a warning sign.
So even if we're seeing these record highs,
Right?
we got to look under the hood
Yeah,
and see if things are really healthy.
exactly. And right now, the advanced decline line is telling us something very interesting.
Ooh, I want to know.
Yeah.
What is it telling? Okay, so you're saying that the advanced decline line
Yeah.
is telling us something interesting right now about the market.
Mm-hmm.
So what is it? What's going on?
So remember, it tracks the difference between the number of stocks going up
Right.
versus those going down.
Yeah.
And it gives us an idea of the strength of the market move.
Right. So if it's going up, more stocks are participating.
Exactly.
Just the extra.
Which is a good sign.
Yeah.
But here's the thing.
Okay.
While the major indexes, like the S&P 500, they've been hitting those record highs.
Yeah.
The advanced decline line has actually been doing something different. It's been kind of,
interesting.
trending sideways.
Oh, wow.
Even dipping a little bit.
So even though the market looks good
Right.
on the surface,
On paper, it looks great.
Yeah.
But underneath,
there might be some weakness.
the advanced decline line's saying, wash out.
It's like a little canary in a coal mine.
Oh, okay.
It's saying, hey,
Yeah.
the rally might be getting a little narrow. Okay, so what does that mean for investors? Like, what should I be doing?
I think it's just a sign to be a little bit more cautious.
Yeah.
Do your research.
Don't just blindly buy everything.
Don't get caught up in the hype
Right.
of the headline.
Be selective.
Exactly. Focus on quality over quantity.
So instead of just chasing the hottest stock,
Right.
I need to
Look for those companies with good fundamentals, strong leadership.
Okay.
Think long term.
So basically, don't put all my eggs in one basket.
Exactly. Diversification is always key.
Especially now.
Especially now. And remember, this reset, it doesn't have to be a bad thing.
Okay.
It's an opportunity to look at your portfolio with fresh eyes.
Okay.
Make some adjustments.
Maybe even find some hidden gems.
Exactly. Those under-the-radar companies.
Yeah, that other people are overlooking.
That everyone else is missing.
That's exciting.
Yeah.
So it's not all doom and gloom.
No, not
I'm all just
It's a chance to reset.
the time to
Yeah.
refocus.
Think about things differently.
Okay, so what's the one thing that you would tell investors to do right now?
If I had to give one piece of advice, it would be this. Don't try to time the market.
Okay.
Focus on time in the market.
What does that mean?
It means trying to predict when the market's going to go up or down.
Right.
It's almost impossible.
Yeah, even the pros get that wrong.
Yeah, even the best investors.
Right.
So instead, what you should be doing is focusing on building a really strong portfolio that's diversified.
Okay.
And then just holding on for the long term.
So basically just ride the waves.
Exactly. There will be ups and downs, but over time, you'll come out ahead.
Okay, that's good advice. So we're seeing this reset, but it's not time to panic.
No panic.
It's time to think things through.
Think it through, reassess.
And maybe even get a little excited about the opportunities.
About the possibilities, yeah. Well, this has been a really interesting deep dive. Yes, it has.
Thank you so much for breaking all this down for us.
Oh, it's my pleasure.
We hope you all learned something.
Yeah.
Maybe feel a little more empowered
Yes.
to make those smart decisions.
Absolutely.
Because knowledge is power.
It is.
That's a wrap for this deep dive into the investor sentiment reset.
Yes.
We hope you enjoyed it.
We hope you learned something.
And remember to connect with us on social media
We'd love to hear from you.
if you have any questions.
Yes. Come say hi.
Yeah. And until next time,
Happy investing.
happy investing, everyone.